heading into the next session. So I'm going to very respectfully ask the FinTech lot to sort of move to the back of the room and stay, because it's a really important session, but we do need to get on with the next thing. So we're just waiting for a few more people to arrive for the carbon market discussion. Very good, very good. And the panelists our panelists can stay in the front just for 1 second, and we'll bring you up in just a minute. Okay. Excellent. Well, look, I mean, we are going to make a start because there is so much to discuss around carbon markets, and it just feels like we don't have nearly enough time, frankly. I just want to, first of all, say thank you very much for coming to this session. I'm sure we'll get a few more people coming in just a minute. I tweeted the other day that I believe that, carbon markets are potentially the most important development for African development since the mobile phone. We can debate that. But I do genuinely think there is an immense opportunity for all of us in carbon markets. It could go all sorts of different ways, and I guess that's why we're here having a discussion about what needs to be done to build carbon markets that benefit a broader section of the population. But I do genuinely think that this is one of those sort of secular moments in African development where we could see some very, very significant change taking place, change for the good. So there is this growing excitement around carbon markets across the world. We need to think about carbon market development, obviously from the point of view of the benefits that carbon finance can bring to the environment, so reducing emissions and sequestering carbon. But we also need to think about it from the point of view of the benefit that will accrue to communities. At a livelihood level. So there's an issue about climate justice as well as the investment, and that's really important to organizations like FSD Africa. But I think from a pure investment point of view, I think there are huge opportunities around spurring entire new industries, frankly, out of the flows of finance that could come from those companies looking to offset in the near term. And I think that's just where we should be focusing the discussion today at an investment conference like this. Africa is an emitter. We know that Africa is a relatively small emitter in the context of the world. It's probably bigger than we mostly think because of the impacts of agriculture and land use on this. So it's about 10%. Somebody said, from McKinsey said the other day that it's probably about the same as Europe, actually, when you count in the land use issues and the agricultural issues. So it's not, so Africa, and we must also remember that Africa's population is also growing very fast. Urbanization is also growing very fast. So the need for sequestering carbon matters for Africa as well as for the rest of the world. I think I just wanted to say, why is FSD Africa interested in this, and why are we making this one of our sort of lodestar future programs? Is because it's like any other market. So we're a market building organization. And any market needs rules and structures and innovation and that kind of thing. So it feels like a very natural area for us to focus our attention in terms of sort of understanding the systemic issues around carbon market development. Our job, it seems to us, is to help to do what we can to put some of the soft infrastructure behind the developments of the market in order that those promised flows of carbon finance do actually come into the continent. So with this is this is going to be the easiest panel I've ever done, actually, because I've got such passionate people who are really, really pioneering in this whole field. So I know I just need to ignite a discussion and it'll run itself. But I'd like first to invite Nick Hughes to the panel. Marguerite, where's Marguerite? There we are. And we'll give you a chance to introduce yourselves. Jack, I'm really hoping Jack is in the room. Good, you are there. Sorry, I was blinded momentarily by the thing. And John, welcome. I didn't see that. So, welcome to, I'll give you that one. There you go. Welcome to the panel, and thank you very much for joining this one. I'm going to start with Jack, actually, because and Jack will explain why it's important to start with him. So I'd like you to please say what CAP-A does and why you can give us this sort of ecosystem perspective, which I think is really important.
Thank you very much, Mark, and good afternoon, good morning. I'm not sure what time it is. So my name is Jack Imani. I'm the CEO of the Climate Action Platform for Africa, CAP-A. And CAP-A is a system orchestrator looking at how do we work with decision makers in Africa to identify, quantify, prioritize, and realize viable climate action opportunities that could be the drivers and the engines for viable economic development, but also job creation. So we're not viewing this just as an additional revenue stream for countries on the continent. We're viewing this as a monumental opportunity that could anchor the aspirations toward middle income status that most African countries do have. And so carbon markets, carbon finance has a big role to play in that. And I think for some of you who have been paying attention to the news, you will see that there's quite a bit of interest on this. Just in the last 5 years, the voluntary carbon markets have grown in a very big way. And I qualify the voluntary carbon markets because there is the compliance carbon markets, which in the long run, potentially could even be much bigger, could dwarf what we're seeing on the voluntary side, but that's a conversation for a different day. So in the last year, though, that growth has even increased significantly. I think we saw about 50% increase in real demand if you measure it in terms of the retirement of existing carbon credits. And for the very first time, you saw the carbon credit transactions value hit over $1 billion in this past year. Now, in those 5 years, Africa-based credits have only made up about 11% of those transactions. 11%. And most of those have come in from few large projects on the continent. So you can see there is still a vast opportunity for the continent in terms of tapping into this revenue resource, new ways of generating funding, and more importantly, ways that could enable the continent to aspire towards making a contribution, making a valued contributions towards climate action. We feel as CAP-A that carbon trading could be a cornerstone of the continent's policy towards combating climate change, but also a key tool, not the only tool, but a key tool in terms of reducing and removing greenhouse gas emissions cost effectively. So if you layer on a lot of the efforts that are taking place with carbon revenues, then you make it that a lot of the efforts that African farmers, a lot of the efforts that African governments are undertaking could be done in a viable, cost-effective way. And you start looking at some of the potential. There's some work being done by McKinsey, supporting GEOP through an initiative called Africa Carbon Markets Initiative that has put a projection of the potential for Africa in terms of carbon on an annual basis at about 2 gigatons per year. We feel that's a conservative estimate from CAP-A because it's mainly predicated on nature-based solutions. Doesn't include the new emerging engineered carbon removal solutions, which could portend even a much bigger opportunity. But hey, let's be conservative and work with 2 gigatons per year. If you do the math, put a value of what? $20 maybe per ton? And you start seeing the worth of those kind of credits approaching about $45 billion annually for the continent. So there's an opportunity that is compelling. There's an opportunity that could contribute in ways that the continent has not been able to see in the past. We know that the potential, or rather the need is much greater than that. I think some of the work that FSD Africa has done has shown that on an annual basis, to address climate change, African governments require about 250 billion. Only about 30 of that is available, which, about 10 to 12% of the need. But then you put in another 45 on top of that, then you're starting to get closer to a 30, 40% figure, and at least closing the gap in a way that allows African governments to achieve some of their aspirations.
And perhaps also when we look at that 45 billion as something that's leverageable by other capital, then you start to imagine.
Absolutely. So that's a good point, Mark, because part of this is also to allow that certain projects that might be teetering on the margins of viability, by now being able to generate revenue, carbon revenue on top of it, it makes those projects even viable now for implementation.
So just super quickly, Jack, risks. What worries you from a CAPE perspective about, because these markets can sometimes go wrong, can't they? So what are the big risks we need to be careful about?
Yeah, I think it's some of the things that we're already looking at. And the risk that you start finding is a lot of these benefits, a lot of the revenue that is accruing from this opportunity is not felt on the continent. And that's a challenge that is structural within the setup that is currently existing. How do we ensure that even as we look at how we can tap into these kind of opportunities, that these opportunities are being felt in a tangible way within the continent, they're not being repatriated outside the continent, and so not incentivizing having this coming on board. But I think even more importantly is thinking through how do we allow primary communities especially, and I know John will be talking to this a little bit more, primary communities who make up, we're talking about smallholder farmers, those kind of communities, who make up in excess of 60% of our population. How do we allow that they can be able to see benefits in this and start monetizing some of the contribution that they're already making towards climate action?
Thank you very much. John, I'm going to ask you now. What you're doing at 1 Acre Fund is pretty staggering in terms of tree planting at the moment, which we were talking yesterday is actually not really your core business, but it's still nonetheless a phenomenal thing. So I'd love you to talk to the audience about that, and just to give some sort of sense of what the potential is for carbon sequestration that comes from that.
Thanks a lot, Mark. So nice to meet everyone. Good morning. My name is John Mundy. I'm the head of climate finance and technology for 1 Acre Fund. And for those of you who don't know us, we're a non-profit social enterprise in 9 countries in Africa. We serve about 1.3 million smallholder farmer clients a year with mostly food staple crops on credit. And we provide those inputs at the last mile to every farmer client that we have. We also have an 8,000 strong field force who train farmers every 2 weeks and track credit. And we do all of that to generate income and impact at the smallholder farmer level as a non-profit social enterprise. About 5 years ago, we started planting trees with farmers, not because of any potential carbon benefit, but because trees are probably the most effective asset building activity you can do that's low cost and at scale across a very large and difficult set of contexts in Africa. So for about a 20 cent a tree cost, we can generate about $9 of return per tree over about 10 years for that smallholder farmer. And that does not include carbon revenues. We have a goal of planting 1 billion trees by the end of this decade, precisely because of those livelihood benefits. And we plant about 40 million trees a year to date. We've planted over 150 million trees to date and 40 million trees this year. So can
we just start at 40 million trees this year? All right, 40 million trees, that's a lot of trees, it seems to me.
So to do that at scale, though, is quite challenging. We run about 4,000 decentralized farmer-owned nurseries so that farmers can pick up seedlings close to where they are. That boosts survival rates, etc. These are not necessarily easy logistics, as you can imagine. And to plant 1 billion trees with smallholder farmers we've recognized that there's simply not enough free money out there to reach 1 billion trees. It's about $300 to $400 million of investment of various forms that we would need to reach that goal. And so carbon revenue offers a fantastic opportunity to be able to plant more trees with smallholder farmers that have all these wonderful benefits, not just sequestering carbon, but as an asset activity, as mulch, soil moisture improvement activity, et cetera, You guys know how trees work. So we've recognized that opportunity, but let me just explain how complicated that opportunity is to really seize, because I think, and as Jack and Nick and Marguerite will talk as well, if not better than I can, to the carbon market, to go from a 20 cent a tree model with layering on carbon market standards, we probably have to make it $1 a tree per farmer. That's $1 billion of capital we would need to be able to meet the standards of the carbon market, to permanently sequester that carbon in the ground. And so for us, we see, yes, a great opportunity of carbon finance, but also a challenging market to access at the moment.
Can you talk about what's holding you back, really? Is it on the finance side? So from an investor, we talked yesterday a little bit about blended finance and the need for a facility of some kind to spur that growth.
Yeah, so theoretically, 1 billion trees would generate about $720 million worth of carbon revenue for farmers and for our organization, and many intermediaries, some of whom are taking too large a percentage in the middle of that transaction at the moment. You know, one of the things that really holds us back is one, patient capital. I think the panel earlier was talking very effectively about the need for patient capital, and we were speaking just before this, and trees are the ultimate patient capital device because they take 15 to 20 years to grow, right? And, you know, over 5 years, the first 5 to 6 years, they really don't sequester much carbon. So that carbon revenue really only kicks in year 6. And then you don't generate significant returns. We're not going to break even on those trees until 10 years from now. We won't make a profit to reinvest in those farmers until 2048. Now, many of the investors in the room would probably say those are terrible timelines for us, right? The risks, in just the timeline risk alone is a big problem. But then you have a number of other risks that we're facing. One of them is price risk, and that, you know, if we are going to link debt to that price over a long term, we need a very solid sense of what the floor price is going to be, and we probably need a price that's going to be closer to $50 a ton, which is 5 times higher than most carbon credit prices at the moment. And we'd really need the market to act like a market. And at the moment, there's really no price discovery between the supplier of the carbon credit and the buyer of the carbon credit. And so we're working on some of those unit economics, but all of that means over the next 5 years, there's a lot of R&D still left to do. There's a portfolio of tree programs to meet farmers where they are with the context that they have, with the types of trees that they need. And there's a lot of grant and public funding that's needed to kind of ease that gap between R&D and a real business case. So,
Marguerite, I'm just going to come to you in just a minute, but I just wanted to kind of, I know you didn't really want me to ask you about pension funds, but maybe for the people in the audience who are long-term investors, you know, perhaps we need to have a discussion about how you can get, and in fact we should have spoken to Konstantin earlier about this actually, you know, pension funds are the natural investors you might think in tree planting, so perhaps we should think of a way to get them into the game. Marguerite, Acorn. Tell us about Acorn and what the work that Rabo is doing for that. And
yeah. Thanks, Mark.
Your hopes.
Very nice being here. So thanks for the invitation to be on this panel. Acorn is a new proposition made by Rabobank. It's a startup within a bank, and why Acorn? Rabobank is one of the biggest food and agricultural banks in the world, and we wanted to do something or contribute something to climate change. And since we're big in agricultural clients, we started to focus on agricultural farmers. And those farmers who are hit most by climate change, and we believe those are the smallholders farmers in amongst others, Africa and also Latin America and Asia. So we came up with this proposition on to help them change their current agricultural practices in making them more climate resilient and also making them more resilient to food security. And we've come up with this platform to provide smallholder farmers access to the voluntary carbon markets. So we want to incentivize them to transition to agroforestry, plant trees amongst their crops, because we think the benefits of agroforestry are numerous. I think John already mentioned it. Soil enhancement, better water retention, so the current crops grow much better. And if you plant trees that are producing fruits, then the incomes of the farmer will also increase, and also harvest season, harvest moments will spread out more. So we think the benefits are huge for a farmer. And then we can monitor, or making use of remote sensing techniques, the biomass on the plot of each individual farmer, and can monetize that into carbon removal units that we can sell to corporate off-takers. And our launching customer is Microsoft, who really wants to offset their current emissions and also their historical emissions. So we think there's a huge market coming up, with also hopes will drive the prices up, because we think there's a really lack of good quality carbon removal units.
Can you put some dimensions on that? What actually is your level of ambition for the project? And where do you think prices could go?
Prices, well, currently we have a floor price of 20 euros per ton. That's actually quite high for in the current markets, but we think we've got a really high quality proposition, because you can really see down to a farmer level where the carbon has been sequestered, and we keep on monitoring that for another 20 years. So we think since we started, prices has go up a bit, so we're at $23 now at the moment, but we think it can go up to, I think, 50 and even higher, wow, given the demands and the limitations of good projects.
Okay. And just staying with you, just how do you relate to 1 Acre then? Are you, I mean, you're doing sort of similar things, but yeah. I mean, you are related, aren't you?
We definitely need partners like 1 Acre Fund and other local partners, because we are based in the Netherlands and we're building this platform here in Europe, but we really need local partners who work on the ground and who understand what a smallholder farmer needs in terms of what is a good agroforestry system, and also technical assistance, because farmers are not used to growing trees on their land, so they need to know how to prune, when to harvest, to get the most out of the agroforestry system. And therefore we need partners like 1 Acre Fund, and I'm very happy that we have started a pilot project with them in Zambia, where farmers are planting predominantly nitrogen fixing trees, so really focused on soil improvement.
Nick, I'm coming to you in just a minute. John, can I just ask you one question that's related to this, which is, when you're asking farmers to not do something, which is to not do what they've been doing for the last few generations, how do you, and to wait for the benefits of carbon finance to flow from tree planting or other restorative agricultural techniques, how do you persuade them to keep the faith over 5 years or 7 years? How do you keep them motivated?
Yeah, that's such an important question. I mean, I think there are a couple of things here. Firstly, we're not going to ask all farmers to change what they do. We started distributing trees because farmers wanted trees in our biggest markets, especially Kenya and Rwanda. We had a lot of client demand for trees, but that client demand was based on fuel wood need and timber need, right? And so it's on us, in part, to replace those trees that are cut down and to keep providing those trees to farmers that they're planting on their land to protect and conserve more virgin areas of forest. So I think there's that key dynamic. Secondly, it's also really important to diversify the tree species mix. So we're finding that, the more fruit trees you provide, more of an incentive for a farmer to keep a fruit tree that's generating significant income. We're trialing global market access for avocados, macadamia, mango. We see a lot of potential there. And then thirdly, soil health benefits and really working with farmers to intercrop or polycrop integrated agroforestry into the landscape with maize and food crops, staple crops, is super important We're trialing a tree that's an acacia species in Zambia with Rabo acorn, about 300 trees interspersed with crops, and over time that will boost the yield of those crops because of the nitrogen fixing properties of those trees. Now farmers understand that. Layered on top of that though, we are paying farmers per hectare for the trees that they keep in the ground for the first 5 years, and we do think that's a very important principle. It does make the unit economics challenging, it does make the long-term carbon economics slightly different, but I would argue that that's a climate adaptation payment as well as a carbon credit payment in the future, and provides real incentives and also a behavior change element that's critical to supporting farmers to permanently sequestering carbon in the future.
Jack, I think you've
Yeah, just wanted to absolutely what John, they're doing is amazing work, because the combination of these other benefits to addition to the carbon the carbon credit revenues that you're expecting is something that provides the incentive for farmers. But I think the question you're asking speaks to the need for innovative financing instruments, because this is part of what will help unlock this opportunity within the continent. If you think about, for instance, a pointed instrument of a kind that could combine access to carbon revenues with placement of capital, and what that could do to the cost of capital for developing these type of projects, and providing that upfront financing that is so valuably needed to enable that these projects can be able to get off the ground. Just wanted to add that on top.
Well, I think, Nick, you're part of that solution, right? And but we'll come back and look at the more wholesale aspects in a minute as well. But go on, Nick, tell us what CAVEX is.
Sure. So, morning, thanks for inviting me. I'm going to talk a little bit about a platform we're building called the Carbon Value Exchange, or CAVEX. We're doing that with some seed funding from FSD, FCDO, and Shell Foundation. Very early stage, but it's addressing, we're providing a mechanism that solves for some of the problems that these guys have already mentioned around the carbon markets. How do we scale them up? Being very frank, the markets do not work efficiently today. It's bumped along for a decade. We all got burnt in 2007. I was working at BP when we built a trading system in the 90s. The model has stayed the same, and it's really not efficient, and we're not finding ways to get money down to people on the ground who are running the clean projects, especially in emerging economies. So we're building the Carbon Value Exchange platform. We are digitally joining up buyers of credits to the projects, so people on the ground running those projects, and we're building the piece in the middle. It's super important that we start to use digital technology to drive efficiencies into this marketplace, because we're not really seeing price discovery. We've got brokers in the middle taking out big chunks. Typically, it could be 40% of the proceeds go out into the middlemen on the way. The standards have done a good job, I think, trying to bring quality in, but it only really works if you're a big project. We need to think about how we can use science and data and digital remote monitoring to get direct visibility of carbon credit activities and link those directly to buyers. And if we can do that, we'll see price discovery. We'll see people paying $20, $30, $40 for a credit that we're not at the moment. It tends to go to a batch that a broker brings along, and it's tied to one particular standard. So it's early days, but if you think about the jigsaw that's needed to make a market like that work, we've got hardened demand from net zero targets amongst major corporates, and also many medium-sized enterprises in the global north setting net zero targets. Now, those are long-term targets. Those are 2035, 2040. They've got to be thinking now about how they can secure carbon credits at today's prices and not take the risk. So there's some sophisticated financing that needs to happen, but trees, John, I like it, trees are your perfect long-term instrument. So that's happened. We've got hardened demand. We've also got the space I've been working in for 20 years. We now know how to move money around at very low cost. If I want to move 10,000 shillings down to an M-Pesa wallet in Kenya from a buyer in the UK, I can do that. So we can use digital finance. And then we've got remote monitoring technology. Your point about, Marguerite, about satellite imagery is, that's just one technology. We've got IoT, machine to machine. There are GSM networks all over the globe. We can collect data back at very low cost related to that activity on the ground, and we can let the buyers see that data, or those data, and that can be audited independently. So I think we have all the bits of the jigsaw. We've just got to step in and say, look, let's make the markets work much more efficiently. Let's not take 40% out in the middle. Let's get 90, 95% of proceeds down to projects. down to the people doing the work on the ground.
So,
that's what we're trying to do.
I mean, yours, I mean, in a way, it's the ultimate global local, isn't it, really, for you? So what I've really learned in the last couple of days talking to you has been this whole thing about being able to provide line of sight from an investor right through to the generator of that credit, which is, if you can pull that off, that's incredible. But tell us something about that global local nature of the carbon markets in general.
You know, a ton of carbon is a ton of carbon, and it doesn't matter where you are in the world. But if let's say I want to offset my journey into London, you know, over the last couple of days, and it comes to, I don't know, let's say it comes to 400 grams of carbon, why can't I buy 400 grams of carbon and see where my money is going? If I want to put £10 in, £10 to me to make me feel better about driving to a train station and getting on a train is nothing. £10 to somebody that's got one tree might generate 1 ton over 30 years. If I can get £10 down to a farmer to give them some reward for putting a carbon sequestration project together on their farm, then that £10 is real money, and it makes a big difference. So we do have that global local thing. When you think about carbon, it's crazy that we're not seeing full price transparency across what I would be willing to pay to offset my impact against the benefits that could make at a household level in an emerging economy is huge. So, but we can make that happen now. So right. I think we've just wrapped ourselves in a little bit too much bureaucracy. We've created a system where there's too much rent taking, if I'm honest, in the middle. And we need to clear all of that out of the way. And McKinsey was saying this as part of the UN task force. Let's use digital infrastructure to make those changes happen. Yeah. And we know how to construct those models.
So your fundraising, and we're going to come back to capital in just a minute, if you just hold the thought. Jack, still with the global local issue, tell us about how you see CAPE playing in this whole area of support for national level carbon market strategies, and yet there's a whole sort of global architecture around the carbon markets that those national strategies need to speak to. Tell us about that.
Yeah, a very important question, because I think when we discuss carbon in the context of Africa, sometimes we can be deluded to think we're thinking of an Africa sort of buyers, sellers market. Yeah. That's not the case. And what we're looking for is the market remains global by nature in terms of the buyers, honestly speaking, are mainly in the global north. But then how do we ensure that in the context of Africa, that the buyers get the value that they're looking for, and that is very transparent and clear from the African end of things, allowing that there is an appreciation of, when you look at an African credit, you can be able to see the value that should be commensurate with what the buyer is paying for. So the work that CAPE is doing is, number one, allowing that and there's a growing conversation around this, so I'll disagree a little bit with Nick. A ton is not just a ton. You know, there is aspects of where you look at a carbon credit and the way it's been generated, some of the core benefits that might come with it, having a healthy differentiation across the various different credits, where a protection credit that you'd find ordinarily in some of these high forest, low deforestation countries like Gabon, being unique and differently priced, and this is already happening, so this is not even new, from perhaps a red credit, you know, a carbon removal credit, carbon reduction credit, you know, which Wildlife Works and such type of project developers are working on, and then emissions removal credit, thinking about how those different kinds of credit needs to be valued, priced, because the effort that goes into a protection credit is not the same effort that goes into a removal credit. And the the core benefits that you would find in these different kinds of credits are also very different. So allowing that there is a little bit of fair and just ways of thinking about this, and that being able to tie back to the buyers, so that the buyers also have an appreciation that, yes, we may not be at the point where we're able to put what the biodiversity benefit of a credit is, but then there's recognition of that when you deliver, for instance, a smallholder farmer credit, carbon credit, it comes loaded with all these other benefits, whether it's ecosystem, biodiversity kind of credits, value for now. And what is that in terms of pricing that you need to be considering, or the premium that you need to pay so that that benefit can be realized by the farmers. And in so doing, allowing that from a farmer standpoint, their value obviously can be felt, the value that they're making, but then from a global and a market standpoint, that is recognized and actually valued in the payment that is being delivered.
Nick.
Yeah, good point, Jack. Just to reinforce the point I was making, at the end of the day, it is about science, and if we can digitalize the science happening on the ground, that's one step forward. And so visibility of that activity having happened and is verified in data, there's good data management. We don't need to go into NFTs and cryptos and fully distributed blockchains. It's just good remote monitoring, data capture, secure data transfer. That's all I need as an auditor to prove something's happened, and all I need as a buyer to know that my money is going to a project that actually exists and the activity has happened. I think your point is right. If I'm Thames Water and I can come into a platform, I've got a mandate to buy 10,000 credits. If I can find credits that link to a clean water project, that's maybe it's a solar irrigation project that's generating credits from displacing diesel generators, then I might pay a premium for it. And that's exactly what I mean about price discovery. We've got to find ways for buyers to see the data, see the science, believe it, and then add whatever premium they want to purchasing that particular credit. And that's a proper market.
Yeah.
And at that point, we'll start to get price discovery.
Marguerite, maybe I can just ask you then, how are farmers seeing this opportunity? Just tell us what it feels like to have a conversation with communities or farmers about carbon finance.
Yes, so when we visit projects, we always want to meet the farmers, and we do have a lot of conversation with the local partners implementing the projects, and they have great examples of all the benefits of the tree planting. For instance, an example of a woman entrepreneur farmer who planted grevillea trees amongst her soybeans, and it was an extensive drought that season, and all the neighboring farmers did not have as good a yield as she did. Her entire field was literally green while the others weren't. So all of the neighboring farmers came, how did you get these trees, and can I get also involved in this project? So there you see a really nice result of the benefits of agroforestry, and the demand comes from the farmers themselves. They want to be part of it. And what we also think is very important in our project is project councils, so that you really involve the farmers. What trees do they want and for what benefit? And we try to make them understand that this carbon proceed can potentially, the money that they can receive can potentially be used to invest in their farms and grow their farms actually.
But they believe, obviously they believe that this money is going to come. You're asking farmers to take out loans that are going to be paid off out of the proceeds of carbon finance, right? So obviously they have to believe it.
Indeed, yeah. So I do get asked, are you really going to pay for these trees?
That's right.
Literally. Or are you going to sell the carbon? So does that mean that you're going to take away my trees? So it's a lot of explanation that we need to do. And I think also a local partner plays a very important role on that part, to really make them believe that, yes, they are going to be rewarded for planting those trees on their farms, and for do not cut them down, the trees. So that's why it's very important to start with these smaller pilot projects, so that it kind of works like an oil stain. Maybe a wrong
definitely the wrong analogy.
Not very sustainable, but no, so that they really see that what other benefits it also provides to farmers. Because we truly believe that a farmer should not plant trees on his farm for the carbon proceeds only, but for all the other benefits.
Okay.
And it's an incentive, and I think also a way of or a mechanism that can be used to finance this whole proposition, the transition to agroforestry.
Okay, so let's talk about that. I want to talk about this J curve. This, how do you finance the upfront bit? John, I'm going to come back to you, if I may, and then we're going to talk about investment capital and how other investors should look at carbon finance, what value they should provide for it. But John, tell us about this. You've got a 3 to 5 year gap that you need to cover in terms of cash flow. What kind of structure do we need to put into the market to help project developers get over that J curve?
Yeah, so I'll partly answer the former question and go into that very quickly. Yeah. Just to clarify, the tree is not on the balance sheet of the farmer. The tree is ultimately on our balance sheet, connected to the carbon finance platform, Acorn and Rabo Foundation debt deal. Why that's important is because we probably won't be able to receive debt finance at a 60 to 80 to $100 million ticket size that we would need to be able to scale up to 1 billion trees with carbon finance. The reason we can't have that level of debt on our balance sheet is simply because we're already pretty much tapped out on working capital for inputs, right? And so there's a major institutional risk if we were to take on that level of debt. And so that's the first answer to why we probably need that runway for 3 to 5 years. Second answer is that it's not really as simple as saying one farmer, one tree, one carbon credit. It's a very complex portfolio of about 10 different models of tree programming across 9 different countries, some of which are direct to farmer, some of which are aggregated, some of which are community land-based, jurisdictional approaches, etc. You probably need a PhD in soil science and whichever other kind of PhDs you could get on this subject to be able to run a program like that. So we actually need to learn over the next 3 to 5 years, frankly, on how to best connect the carbon markets with smallholder farmers, but also with our tree operations at scale. And then the third reason is partly because even with the unit economics of the Zambia model, Marguerite and I were in the field with farmers. Farmers, their first question when we were together talking to a farmer called Joseph, he said, how much am I going to get, right? And like, how much is my incentive for the next 5 years to keep this tree in the ground? And then what's the price over the next 15 years? Very legitimate questions. This is a new business line for that farmer. We can't answer any of those questions right now. And actually, if you were to answer the next 5-year question on the incentive payments he's getting, they're not enough. They're about $8 a hectare. He's calculated he needs $30 a hectare to displace that 10% soya that he's not going to be planting or selling this year or next. And so we need to get much better at figuring out what really is that incentive for the next few years for that farmer to keep that tree in the ground, and then how do we operationalize that at scale to millions of farmers.
Nick, you're fundraising at the moment. How should bigger ticket long-term equity investors value carbon? Because at the moment we're getting some mixed signals. Some people think it has value. DFIs, I believe, are often saying, well, it doesn't really add value. Is it simply because it doesn't, or because they don't understand it and they prefer to discount it? What are your thoughts?
I think we have a legacy problem with people's confidence in the carbon markets. It's something which we're advocating the use of digital technology again for, and it's exactly what Mark Carney was saying in that report just before COP26. We can improve the market efficiencies. Is there a supply side? Do we believe there's enough out there to make this interesting? Absolutely. I think the barriers to people getting into the markets on the supply side of projects have been created with the existing methodologies. I think if we can take those barriers down, we'll see more projects come forward. I think it's already been mentioned. It is a good point. You wouldn't start a project just for the carbon revenue. It has to be incremental to the project. It has to add a value of some sort, whether it's direct monetary value or it's tied up in, there's lots of ways we can get quite sophisticated now about how we release front-loaded digital finance for an asset which is accruing value later. And again, the forestry example is a really, really good example. But again, if project financiers can come along and say, we'll give you the finance at 5% coupon to deploy a carbon positive project, the deal is that credits go on to a platform like CAVEX and are either proceeds going back to the project or are being used maybe to potentially offset the end price to consumers. So I think there's ways to use real money flows front-loaded to help offset some of these, the costs of getting some of these projects going. But there has to be an economic case to run that project anyway. Yeah, and you know, these aren't numbers we're putting out, but McKinsey are saying $50 billion. We're modeling, we think this can get to a $10 billion market over 5 years. We think we've modeled on the price of $8 a ton. It sounds like you're already selling way above that, but we're saying over 5 years, $8. We think we can lock up 100 million tons of credit and release $500 million back to projects. And that makes a very viable platform that we're raising funds for at the moment. So, and we're being very conservative in these, you know, in these forward projections of the size of the market and the price of carbon. I think we've got to try and build some confidence. So we're big believers in get out and do it and show it working. And then I think we'll start to sort of build some confidence that these markets can exist and that there's routes to profitability, and we're having an impact in terms of locking up hundreds of millions of tons of carbon.
Fantastic. We have about 10 minutes to run. I'm just wondering if there are any questions in the audience. Thank you. There's a question here. And I expect we probably have one or two coming through on Slido as well. So we have one there and one there.
Good morning. I have a question concerning 1 Acre Fund. So you plant the trees, and obviously you wait, and then you harvest a lot of carbon through the period. How long do you expect the carbon to be stable in the trees afterwards? Because obviously I find it quite interesting in the carbon market that we talk about selling all the credits, but you know, a tree, it dies, even if we burn it, then we release the CO2 back into the atmosphere, and it's all about the time frame in which we can capture the CO2 in. So in your projects, both with Rabobank and 1 Acre in Zambia, how long do you see that your acacia trees are, like, how long is the CO2 stable for, essentially?
That's a really good question and takes a lot of technical reviews to boil down into a simple answer. But basically, we're operating on a 30-year timeline at the moment. Most carbon standards agencies operate on 100 years, right? And I think in the Zambia case, we're more confident that we can guarantee more of that carbon is stored in that tree because of the life cycle of that Phyderbia acacia variety and the way that it will interact with the soil. In other contexts in East Africa where the tree species are different, there are question marks even within the standards agencies at the moment about how long carbon is even sequestered within a timber that's in a household in the tropics, for example. And so there are these very, very long-winded technical discussions about whether or not that carbon is fully locked away for that timeline. I think from our perspective, you know, we're trying to operate on a good enough kind of basis with smallholder farmers and make sure a lot of that value is captured, and also recognize that the immediate need to decarbonize the global economy over the next 30 years is probably the priority anyway. But to make a long story short, Marguerite, I don't know how you operate. I know you certify with Plan Vivo, so perhaps you've had conversations about that.
Yes, so we work together with the spin-off of the Wageningen University in the Netherlands, and they have ex-ante predictions. And our models are based on satellite imagery combined with LiDAR and also with ground truth data. So we actually, for every new project, go into the field and count the trees, do the measurements, so that we can really make the models good and accurate. So that in the future we can really measure the delta in the growth of the trees. And we compensate for the annual delta of the trees. And we keep on monitoring 20 years after we've sold the last carbon removal unit. And yeah, I think it depends on the tree type, but we think now we can compensate for roughly 20 years an annual growth. And after that, we keep on monitoring if the tree is still there. We also have a buffer pool in case of fire or any other events, so that we can keep the promise to the buyers of the credits. So we store a percentage in a buffer pool that we keep as a.
It's a really interesting point, though, isn't it? I mean, on the one hand, you know, the perfect is the enemy of the good, right? So we're all sort of fiddling around trying to work out how but on the other, we do need integrity in this market as well. So, and yet the planet is kind of burning. And so we want to do things relatively quickly, but in as orderly a way as we possibly can. But it's a great question. And there was a question here as well. Thank you.
Hi. So as a potential supplier of, let's say, credit, because our company just purchased, I think, 5,000 hectares in the middle of Central Africa, so Bangui, next to Bangui, and we have we don't know what to do with it yet. So if I'm thinking as a supplier, what would be the mathematics for me to actually invest in growing trees, and then how would it work? How would I be able to actually get my money out,
Interesting. Well, it sounds like there may be a longer conversation to have with one of these guys about that. But do you want to answer? Anybody want to answer that quickly? Maybe Jack, you'd like to go for that. How can he monetize his asset quickly?
Yeah, I don't know how much I can respond in about a minute here. So, obviously, I'm guessing that you're considering, okay, how perhaps, some agriculture, forestry, or other land use activity could help in generating carbon credits. And, there's a whole process that goes into, looking at viability in number one, and how that would translate in terms of upfront capital investment that would be needed, and then the offtake of those credits as well. And
so growing trees is not enough.
What's that?
Just planting a bunch of trees that grow quick would not be enough.
It's a start.
It's a more complex. So let me answer your question this way. This is part of the challenge with the market. We're talking about democratizing the market. This is part of the challenge that we need to solve in terms of, potential suppliers like yourself getting a clear understanding and knowing that they're getting value for what they're putting in. And unfortunately, I wouldn't say that's the case at the moment. And you could say from off the top of my mind that perhaps on 5,000 acres, you might need to subsidize that. But then again, what carbon price are you getting on the other side? We were talking about price discovery of carbon here, where it's not transparent in the way that a normal market should work. So if you're to go off the current market prices, you're likely not going to get the upside that you might be looking for. But that's not to mean that this is not important. So I want to make that very clear. I think it's a question of how do we make the market function in a way that projects like yours, and also an understanding of what minimum viable scale should look like, that allows that you're able to put money. Is it a 5,000 acre? Is it a 1,000 acre piece of land? What could that be for nature-based solutions type investments?
But I'm just to also make the point that Nick was making, that the project needs to stand on its own 2 feet as well. I mean, just to do it for carbon credits probably wouldn't be enough. I don't know, John, do you want to say anything?
Yeah, I mean, it's a lot easier to plant 5,000 acres of trees and access the carbon markets than work with 5,000 farmers on 1 acre plots and plant trees. So your ROI is going to be a lot better than ours. However, I would say that the biggest issue really is that it's a massive data collection exercise. So you have to decide whether or not that data collection exercise is really going to be a cost benefit for you. We're going to plant trees with or without the carbon markets, and we would like that revenue, but if we don't get it, we'll still keep planting trees. If your motivation to plant trees is the carbon revenue, then you need to figure out, can you do all the baseline collection activities and the verification needs over a 20-year timeline to be able to make that worth it for you?
Dorothy.
Yes, the conversation today has mainly been on agroforestry or man-made, forests. Where do you see the situation, and maybe for Jack and Nick, on natural forests, and especially in relation to government support? How do you look at carbon credit markets from a natural forestry perspective?
Are you talking about pre-existing forests?
Yes, more of conservation and working with government.
This is one of the conundrums, isn't it? Who wants to take that? Because it's a...
Yeah, there's a whole debate brewing around that, because the current structure, the rules right now, as they're currently structured, they reward you for avoided emissions, essentially. So there has to be an element of threat to what you're doing for then the markets to, at least based on the current existing rules, for you to then be rewarded for, with credits that then you can monetize. So in other words, if you have a standing forest that is under no threat, then there is no pathway as of current existing rules for you to monetize that through the carbon markets because it's perceived to be, it's okay. And this is part of the challenge that you're finding with countries like Gabon, who are saying, we behaved well, we protected our forests, and you're telling us we need to, quote unquote, misbehave for us then to see a benefit from this. And so, obviously, a big challenge in allowing that when countries that have been able to put in the right policies and structures to protect their forest and have allowed that those forests can continue sequestering, even though at a slower rate, because most of those are mature forests right now, that they can be rewarded in some form of way or the other. So I don't disagree with that. As I hand over to Nick, I also wanted to emphasize the opportunity for carbon credits on the continent go beyond nature-based solutions. I know that's what we're discussing here. There are other opportunities that cut across other different areas, and I think we need to open our minds to that as well as we think about areas of investment.
Final, just closing, super closing remarks. Any quick closing comments from you, Nick? Yeah, why don't you start?
Yeah, sure. Is this one working? Okay. Yeah.
Super quick.
Well, look, yeah, super quick. Look, we know how to do this. We've got good digital technology. We can do remote monitoring. We can move tiny amounts of money around at very low cost. We should use that framework, digital framework, to drive more efficiencies into these markets. There are loads of complexities and challenges, and the science is still emerging, even things like mangroves and soil use lockup. It's all going to come, but let's use a proper digital framework to make the markets work.
Fantastic. Marguerite.
Yeah, I would like to address the investors because I think the pre-investment stage is really important, and we need to start these projects now and not wait 2-3 more years. So we need blended facilities, I think, to make this all possible and to help local partners implement.
Jack, any quick closing?
Yeah, I think challenging ourselves to think of business models that work to enable these projects to come to the market and leveraging existing development finance to allow that we can develop those tools and models that then allow us not to be dependent just on philanthropic funding to make this happen.
Great. John?
I think we have a fantastic opportunity to drive scale and impact for smallholder farmers in 20% of the addressable market of Africa of agriculture if finance could be designed equitably and if we could have higher prices.
And just to say thank you to Jack for reminding us that there are other ways that you can generate carbon credits. So maybe direct air capture in Bangui, why not? I don't know what the rock formations are like, whether you can trap carbon underground, but maybe it's really good there, I don't know. Thank you everybody for staying the course. Thank you to the panelists. Look forward to the discussion.